Hi everyone, welcome to the Mighty Trades channel and welcome to another episode of the Global Market Analysis. So today's date is March 26th. Let's take a look at what happened globally and in India last week to build a view of what can happen over the next week and the next couple of weeks. So let's take a look at a couple of global macroeconomic indicators starting with Brent crude oil. So we're looking at the price in US dollars. This is the global standard for looking at crude oil prices. And as you can see, last week we saw crude oil move up by 10%, almost going above $120. So again, not a great sign for anyone in the world. This is going to add to the inflationary pressures that we already have. Looking at gold, gold has also moved up. This is also not a great indication. Let's see, there is not a really large breakout that has come yet in gold. So still it's in control. Still people, I believe, are still confused whether they should pull out money and move more into gold or no. So not really sure at this point. The volatility is so high all across the globe. There's no real direction to understand what's happening. If we look at the US markets, let's see how they closed last week. So the US markets had a positive closing, largely a consolidating week. If you look this weekly candle, it only moved up by 0.31%. So largely consolidated in this very narrow range of just, as you can see, just 100 points, right? If you look at the larger, broader index, S&P 500, that did a little better, but again, consolidating in an 80-point range for the entire week. Nasdaq gave also a good closing here, moved up by 2.3%. That was good, and consolidating in a range of 330 points. One good, really good indication is that the volatility index in US has massively corrected over the last 3 weeks. So it looks like the fear out in the US has really fallen down. It's corrected by 44%. So the US markets are now very less volatile, as you can clearly see from this range that it's trading in, right? It's trading in a very tight range, not many big moves happening. So this is a very good indicator that the fear in the US markets has actually subsided. If it goes even below 20, that will even be a better sign. But right now, staying below 25, if it stays below 25 for the next couple of weeks, then I think that will stabilize most of the global markets. If you look at the Canadian index is actually doing extremely well. I think this is one of the indexes that is outperforming everyone. It actually closed at its all-time high last week. If you look at the past data all the way back till 1990s, this is the highest closing that the Canadian market has given. So a good thing happening out there in Canada. If you look at the US 10-year GSEC, which is basically an indication of the interest rates in the US, this has reached an almost a 3-year high right now, which means that a lot of the money might get pulled from equity markets and go into debt funds because they are getting a good return over here. You have to think of it from the point of view of large investment funds which have billions of dollars. They might want to park some of their money in this debt fund, even if they are getting a 2.5% return. It's a decent return for them because the amount is so large. If we take a look at the European markets, then the French market also consolidated in a very tight range of just 66 points, gave a negative closing by 1%. The German market also consolidated in just a 100-point range, and the UK market gave a positive closing, but again consolidated largely and just consolidated in a 78-point range, as you can see here. The Russian market surprisingly opened last week and it tried to move up, but eventually it closed where it had closed back in the month of, I think, February, when they invaded Ukraine. So almost after a month they opened their stock markets. So the major Russian index gave a negative closing by 11.5%. So not a really good thing for any investor who is invested in Russia or for the Russian public. All their wealth has just been lost since this invasion. If we look at the Russian volatility index, that is still trading at all-time highs, and it went up to almost 170, 180. I never knew that anything could go above 100% in the charts, but apparently it can. So the fear in Russia is definitely at an all-time high right now, and it could possibly fall even further. Let's look at the US dollar index. First, let's look at the global dollar index here, which is this US dollar index. So this is again also at an all-time, close to an all-time high right now. It's very close to its all-time high. If it gives a breakout, it might go up till 100 to $103. And if you look at the USD INR index, then this is actually sort of uh, consolidating with a negative bias. So it looks like some selling might subside in the couple of weeks, for the next couple of weeks at least. I don't see the FIs maybe not be selling too much. Looking at the way the dollar index is moving, behaving against the INR. So let's see what happens. Right now, though, the Indian rupee appreciated by 1%. Last week, it again depreciated by close to 0.5%. But let's see. As long as it stays below 76, we should not be more fearful than what we are right now. Now, let's quickly take a look at sector-wise performance. The small cap index moved up by 0.25%. And consolidated in a 25-point range. The mid caps gave a positive closing and consolidated in 300-point range, which is good. Metals did extremely well last week. Metal stocks are firing left and right. It moved up by 5%, so metal stocks should definitely be in your radar. Uh, the banking sector continues to underperform the market largely. The bank Nifty underperformed by 2.8%, and Nifty Private Bank underperformed by again 2.76%. PSU banks are still holding up relatively well. They only moved down by 1.5%, so definitely something's happening in PSU banks. IT did well mostly throughout the week, but I think in the last day, if we look at the daily chart, then yeah, on Friday it gave a negative closing. Not sure why, but overall IT looks pretty stable or bullish right now, I would say. FMCG continues to underperform after a stellar 2-week bull run. It corrected massively. This is a bearish engulfing candle that it's made. It's completely covered this green candle here. So we can expect a further downside in FMCG stocks. It might come and retest this level, probably make a double bottom and move back up. Media stocks did extremely well. I think Zeal moved up a lot. TV18 broadcast moved up a lot. So these media stocks, something's cooking there. They are doing pretty well. Infra did okay. Nothing really great happening in infra, I would say. Reality index also did okay. Nothing great. That happened last week. The auto sector continues to be punished. I think all the inflationary pressures are hitting them. The microchip issue is hitting them. Crude oil prices being at all-time high, petrol being expensive is going to hit their profit margins. So auto sector is looking a little weak right now. Let's see what happens. Energy companies again doing well with commodity prices and energy prices up. Their margins are going to possibly improve. So they are doing great. Consumption stocks did not do great. In such a high inflationary environment, a lot of people would possibly be looking at postponing their purchases and tightening their purses and keeping more money with them. And finance industry also underperformed last week massively. The pharma industry consolidated very tightly in a 61-point range. So let's see what happens in pharma. And if we look at the broader market, which is Nifty 500, so the broader market consolidated in a 70-point range, which is Nifty 500. And Nifty also gave a negative closing of 0.78%, but largely consolidated only in a 130-point range. So that's the view on the Indian market. Let's also quickly take a look at the Indian volatility index. So after 2 weeks of good bull run, the volatility index came down a little bit, but it again moved up last week. However, it's a good sign that the volatility index is staying below has not been able to close above, this line, which I consider to be a major point. I think if the volatility index ever closes above 29 for an entire week, then we have to become really careful in the market. But as long as this line is not breached, I think we are still we can still retain a cautious stance, but not we don't have to be fearful as such. So volatility index moved up by 3% last week, but I think it will further come down because the US volatility index has come down massively. Let's also take a look at Bitcoin and see what's happening there. Bitcoin's been doing pretty well for the last 2 weeks. If it breaks out above this point, I think Bitcoin might see a good rally then up ahead. So that's the view on the global markets and the Indian markets. Overall, largely a consolidating market globally. Volatility going down. People are getting used to the fact that this Russia-Ukraine war is going to be there. US just signed a deal to supply gas to Europe, so that's also a good thing for European countries. So let's see, there are some good news coming out, some bad news coming out, and largely the market is just consolidating, I think, consuming all the information that's coming in, pricing everything in. So hopefully you enjoyed this analysis, and thank you for watching.